CDP, CDPT Defense increases dividend
Yes.
by 4.9%. That's Charlie Delta Papa. WKC World Connect reported 30 cents in earnings. That's WKC.
What else? I want to show.
World Connect, the estimate was 47 cents.
What's up, everybody? Let me just gather some stuff here. Give people a couple minutes to get in here. Hold on. I'm forgetting
That's
something. I wanted to show.
WKC on.
This is February 15th.
RMAX rebounds 30 cents. That's in line with estimate for Romeo Michael Alpha X-ray.
Something I'm forgetting here.
PK Park Hotels naming a new COO from Papa Kilo.
All right, I'll go through with mark the section while I'm doing this. How's everybody doing? Let me mute this guy. Any interesting earnings? Not really today, right? We got NVIDIA next week. Damn, I forgot about NVIDIA next week. Just when you think there might be a nice and easy, somewhat quiet week, no, not going to happen. You probably get Iran bombs and NVIDIA next week. What am I kicking off here? Oh. Right? Probably get Iran bombs and NVIDIA. Grail? What's Grail? That sounds familiar. What is that? Oh, isn't that a spinoff of somebody? Grail? Oof. That's a debacle. Yeah, but look at this has been hot. I didn't even realize how hot this is. I mean, this was you still got a few of these hotsy names. This light goes up constantly. There's nothing, no stopping this thing. Look at this. I thought, well, the Niners still could stop it here. You know, it's only a couple of days, had a little chop. I mean, this is kind of running into something like this again here. What a move. Damn. So you still got some select hot names, but the majority of stuff, and that's what we'll sift through here as we go through things, kind of go through some of the stuff that we were hoping to get, hoping to cool off, to digest through earnings season, and very gradually we've been getting it. We've been getting it. All right, let me make sure I got everything muted. All right, so let's start with this, right? We had, if you remember last week, we talked about how it may be an interesting week, a noisy week this week. It's going to be a tough week, especially for us in the steam room who rely on the flow in a big way. I mean, in regards to myself, that's solely what I rely on as far as timing mechanism in the market. But because of monthly OPEX, and again, it's not necessarily every monthly OPEX, but because of how bullish the market has been without really an overall correction, the continuing rolling month by month, it extends kind of the problem you have to deal with OPEX, and that's just a lot of rolling activity. I would say though, it's not as crazy this month because, well, two reasons. One, a lot of the hot, crowded tech space has been lit on fire in a negative way. So we're not seeing as heavy rolling activity as we would normally see. Now, NVIDIA, you're going to see size rolling, right? But usually the flow is bombarded with these names in size. At least it has been the last few months. We really didn't see that. And tomorrow's Friday. But the problem doesn't really go away because any flow, and I'll give you an example once we go through some of the indicators. But some of the flow we saw today, there were a few interesting names, at least for me, the type of names I'm looking for. But every single one of those names had decent size Feb open interest. The most of them, and could just be replacing that exposure as we talked about. So this was going to be a crappy week to really get any tell from the signal out of flow that we pay attention to. Okay, but that being said, what we wanted to see is hopefully some of the things that we needed to work on in regards to sectors cooling off and the rotation that was taking place and stuff like that. Things cool off a little bit, and we're getting that. We got that. Okay. As you guys know, unless you've been living under a rock, the markets up at the index level haven't been doing a damn thing. Okay, but underneath the hood, we are in a correction. And I could say that now. We couldn't say it, I think, until some of these cyclicals cooled off. But now that we're seeing parts of the places they were rotating into that were scorched, now that they've started to digest, this is basically a correction. We've had a rolling correction. Now, the question, I think, the most important question here becomes, do we see, in other words, does the selling and the carnage in the crowded stuff eventually spread into some of the other areas that have been outperforming? That would be the last stage if that happens. Okay, and that's not a given. It doesn't have to happen here. I think we would prefer if it happened, because again, the market would come in a little bit more, the indexes would come in a little bit more, and that's basically your correction. And once that runs its course, I think that's a great entry. But because of this rolling correction that we got, you could see just a day or two of selling in some of these cyclical areas, and that could be the bottom, and that could be it. Now, again, I don't think that creates as strong as a tailwind or as long as a runway if we kind of get that little deeper pull, but I certainly see that as potential where we don't need a deeper pullback, and that can end things for now. All right. Another thing, another possibility, obviously, is we just continue to do what we're doing right now. That's hard to envision with all the catalysts out there, right? But I don't know if you guys remember, and again, we don't trade these European markets. Sometimes we trade ADRs. That's the extent of it. But if you remember, we talked about the DAX doing something like this. And this was back here. Well, let me get this off here. Right? So you had something like this for a lengthy period of time. Okay. After a pretty steep and aggressive rally coming off those April lows. And, did this for how long? It topped out late May and finally kind of broke that trend. It didn't get too far, but still looks okay. May still be in it, but let's say January. So from May to January. So we certainly could see, again, depending what index you're looking at, but the S&P 500 kind of do something like that, and that's what we've been doing. And guys, here's the thing too. What we've seen here, Ryan, we've talked about this in the steam room. This is the ultimate pain trade. This is as painful as it gets. Okay. The stuff that everybody's holding has been blitzed, right? Some obliterated. And the protection that they may have via S&P 500 puts or VIX calls is not getting them anything. And they're losing on all sides, right? While the other parts of the market are holding the indexes up, they're outperforming, they have no exposure in those spots, right? So this has been the ultimate pain trade. The ultimate pain trade. And that's why I think regardless, at some point when this resolves, I think it may end up being a really bullish thing. Okay. The risk is this tech, and I think it's more of AI. Forget about tech, even though it's been all of tech recently. This AI ends up becoming a bigger problem than it's been. Right? In other words, it's not just a correction. Something blows up, or credit wise, whatever it may be, and it kind of brings in a mini 2000, right? 99 into 2000. Again, I don't see it being as bad because we didn't have as crazy of a move as we did through the late 90s. But that's the risk, right? That's the question none of us know the answer to. We all have opinions. We all can guess, but this is new to everybody. Nobody's going to figure this out. It's all guesswork here. It's all guesswork. Okay. But those are both sides of the equation here. Okay. So the proof is going to be in the pudding. We're going to see signs of it along the way. So we don't have to predict as much as you may think. But that's kind of where things are at right now. Here's, again, the problem I think we were facing coming into earnings season was that the stuff that we really didn't want to look at because it was still crowded sold off, but is continuing to sell. And the stuff that we were paying attention to from October got overcooked, right? They overdid it on the upside. And little by little, each and every pocket of that overcooked market has cooled off. The financials, right, which were kind of the strongest of the group, they started moving, even before October, they were holding up better. That had a nice yank, right? Some AI disease spread over there too in parts of the financials. And that's the potential risk, right? Gold and the metals, gold, silver, copper, you name it, had a crazy explosion. They all have cooled off nicely. I mean, these things now, they kind of gone dead here in a sense since the big pull, right? So each and every one of these areas have cooled off. And now, interesting, here's the thing I find most interesting. Now the stuff that needs to cool off is more defensive in nature. It's not necessarily risk on, right? So you have like the utilities and not the AI utilities. These are the old school utilities, okay? They're one pocket of the market that's kind of a bit overextended. Again, I don't want to throw the word cook there. They've been hot, they've been up a week straight. Okay, it's not like these things gone parabolic in a straight line. But the point I'm making is, this is a defensive. This is more of a risk off posturing here, right? The staples, which by the way, from what I see, are still heavily shorted, because they're expensive. It makes sense, but usually when these trades get crowded, they squeeze them as they've done. But here's another group, and the staples again are defensive. This is not a risk-on group, right? If you're bullish macro, or you're feeling strong in a risk-on mode, you're not buying staples. You're hiding in staples, right, for safety purposes. Okay, so while there's still some stuff that needs to cool off, and this from Sentiment Trader, I love this chart because just at quick glance you can see utilities, energy, right? Even staples have cooled off a little bit, but you got a little heat. And materials could probably cool off a little bit more, right? A lot of these commodity areas that have been hot, materials. But other than that, you look here, now again, they're not oversold in an extreme way yet, but there's no more heat there. There's no more heat. So I think that what it does for us is going into next week, now that we get our edge back from sweeper activity, okay, any action, clean action that we see, and again, now there's going to be more clean action because it's not OPEX. We like the name, we should be buying it. We should be buying it. Right? And again, that's just an overall synopsis, right? You still got, we looked at like an LIT that's still in parabolia mode. You know what I mean? But what this is telling us is just ballpark overall view on things. There's not nearly as much heat as we were concerned about. And now you got a better setup, a cleaner setup going into next week. Okay. So that's a good place to start because let's look at, some of the other things that were concerning and see where they stand. Okay. This is, again, we like to look at this vol divergence, VVIX in particular. You guys know I like to look at that. It's difficult for this market to find any upside momentum when you got this divergence that continues to linger. We've been talking about it for a while now. Okay, you get this divergence, you get a washout where equities sell off, catch down, right? And then literally the first rally back, you got VVIX divergence surfaces again. Okay, now what this tells us is there's something lingering. Could be the Iran crap, right? Which I don't know if you guys paid attention to the headlines today. I had no idea what the hell's going on there anymore. Two sources of breaking news that Trump, it was imminent. He was ready to bomb Iran. Then literally 10 minutes after that, he's giving them 10 days. Then half an hour after that, he's giving them up to 14 days. And then Axios breaks something that he's really close. No clue. Maybe he's probably doing it on purpose too, all right? To not show his hand. But that could be potentially what is keeping this bid here and has it lingering. Right? You also got this tariff Supreme Court thing tomorrow. Yeah, we'll know tomorrow, right? If we see a pretty aggressive unwind in this stuff tomorrow, if it's a nothing burger, could have been this that's been holding up. The point I'm making is that the mechanics and what is giving us this sideways menagerie we've been in is a lot of this stuff. There's a lot of this stuff, and vol divergence is one of them. Okay. So again, I think it's important here. What really important to keep an eye on the unwind there. If we start to see this unwind, right? So this is the daily today as of the close. Okay, and you can see here, right? It started from here on the daily as the S&P is the bars in the background. As the S&P continued higher, VVIX went higher with it, right? And then that led to basically what we're dealing with right now, and you still got an uptrend in VVIX. Here's inverted VVIX, so you can see the correlation even better, right? This is kind of risk on, smooth sailing uptrend in the equity markets, right? VVIX right in sync. And you can see right here into these highs, VVIX started to make lower highs and deteriorate. And eventually, that's going to hold back any further momentum there. Okay, this is VIX, by the way. I think I mentioned that. Here's VVIX, right? Same thing. And even TDEX, which measures tail risk, you're seeing the same thing there. Okay, so I think there's good and bad here. The bad, obviously, is it keeps us in this mess that we've been in. The good, when you get an unwind here, it's going to really pack a punch for equities. Okay. Same thing with credit, right? We kind of seen the same thing with credit, where at times it looks better, and at other days it looks horrendous. But net, same stuff. Literally since that October blow off top in many of the more bullish areas of the market, which is right here. Look what happened here, right? Since that October blow off top, it's been just chop, right? S&P makes new highs. Nope. Credit spits on it. S&P makes another new high. Nope. Credit spits on it. This recent one here, nope. Didn't even bother budging. Again, just it's an indication of sloppy tape, not the risk on tape you would want to get aggressively long into. All right, sloppy long into. Correlation was a big issue of ours, right? Big problem. It was dodging landmines, as we were saying. Dancing around kind of that area where every time it gets there, you're going to get this quick rinse in the indexes. So we pulled away from there, right? We've pulled away from there. And again, I would love to see at least something like this November thing here that probably would take that little that spillover sell that I was talking about earlier, right? So some of the stuff that's been holding up the best, the tech selling spills over into there, and now everything, right? That high correlation dump for a day or two. That'll get you at least this, which will be beautiful. And honestly, that, again, barring any exogenous bomb that goes off, I think that would be the low. Even if the equities go a little bit lower than that, that's the low we want to play on. Because you're going to have the spike in correlation. You're going to have internals now washed out exactly where you want them. The put to call ratio, which we didn't even get to yet, we're going to get to, will be screaming by equities, right? So if you do get that correlated sell, even just a day or two, you're going to have bull signals lighting up all over the place. Here's the put the call. Now, again, the put the call is just a straight up volume indicator, right? So when you dig a little deeper, which I like to do in some of like the opening put the call ratios and stuff like that, it's not as drastic as this. This is straight up volume, right? I know everybody, especially on social media, it's, they make such a big deal out of it. Back in the day when you didn't have access to every reading and indicator under the sun, the put the call was it. Like if you had an equity put the call flash of 1, You didn't ask any questions. You didn't look at anything else. You just bought, But now you got cleaner signals than the put the call. But the put the call still is so widely followed that it gets shorts to cover and gets old school fund managers to put some money to work. Right? So you're already here at an area that you would lean bullish. I got one more actually. Let me before I forget. There's so many different things I forget to show you guys. Hold on, which is actually interesting. Let's go back here. All right. Come on. Now this is yeah. Oh, I don't need this first of all. Let me get this show. Okay. So this is just another form of the put the call a detrended. So in other words, more of a moving average takes count of these flash moves out, right? So if you get a spike one day and then it recedes the next day, it's kind of a fugazi signal. So it's more of an average, and you're right here right now, coming into today, right? So again, going back to my point, if you get kind of that high correlation sell up for a day or two, you're likely going to be a lot higher than here, right? So you get these type of readings, which would signal nerves, panic. Okay. Another and this is just again, you're seeing this stuff because of the carnage out in a lot of the beloved stuff. This is a panic indicator, okay, based on volatility from Goldman. You're up at a 9. It doesn't go higher than 10. Okay. You get a high correlated sell for a day or two from here, you're panicked out. Right here, even where it is now, as we talked about in the steam room, this is likely going to keep things squeezy without a news event catalyst, right? So, in all likelihood, you would need to see the selling in the after hours off news, and kind of what we've been seeing, right? Market selling overnight, boom, squeeze it, as soon as the market opens in the morning. Okay, because you got things like this, the equity put the call that are pretty bared up already. Again, in simple English, it just tells you that players are lathered in insurance and protection. Going back to the point I made earlier to start, the ultimate pain trade. Players have protection on. It just hasn't protected the stuff that they needed protection on, if that makes any sense. Where all the pain is, this protection doesn't do any good. Okay, so if you think of it, stop and think with it. Do you get even that 1 or 2 days of real selling with this stuff up here? That's not easy with this stuff up here. You need something spooky. You need something spooky. All right. What else we got over here? This is the MOVE index. So this is kind of again the VIX of the credit markets. Right? So if there's something bigger going on, especially with this AI garbage, it's been lifting of late. And if you take big picture wise, Yeah, done it here, really nothing major. But a little starts to lift, you keep an eye on it. This is not of today's close. I mean, we could probably look right now. Up today. Okay, so back probably right around in this area here. Okay, but ultimately it's been in check. No glaring warning signals there. Okay, it's been in check. What else we got here? This is what we were keeping an eye on here, right? And let's talk about systematic funds, all right? Because this is too like when you say the spillover, this is the risk, right? You get something to set off these guys that can create a little bit of cascade selling, right? If you remember, this thing was kind of hovering around zero, which told us that the systematic funds were more likely to be sellers of vol into any strength than chase strength, right? Now it's up a little over 4, right? So you're losing some of that oomph in regards to selling, right? So it's more neutral now, okay? If this thing creeps up over 6, you run the risk, kind of what we faced in April, to where if there is news and you get vol pop, these systematic funds are not straight up sellers anymore. They put on VIX exposure. Okay, so we're not there yet. We're more neutral, but we're kind of away from that signal where they were more inclined to be sellers. Okay, and that kind of lines up to where we are with CTAs. This has been in the magic line for the week, roughly around 6,700 on ES. And if the price, if you break there, and especially if you hang out under there, that's where CTAs will go from long exposure to short. Right now, CTAs have been sellers all week. Okay, in every tape, up, down, sideways, crooked, they're selling. Okay, but not extremely aggressive. They're trimming long exposure. If the market cracks this level here, that's when they're going to step on the gas a little bit and unload some supply, because they're going to take down their long book completely and add short exposure. Okay, which again, is it big picture the end of the world a bad thing? Absolutely not. Some of the best lows are lows that CTAs are caught short in, because once the action turns and once VIX rolls over again, they have to put that exposure back on. They got to cut the shorts, right? So that's buying there, and then they got to flip long, and that's more buying there. So short term could be an issue, right? But intermediate term, longer term, most bulls will probably want that right now. Okay, but something to keep an eye on, right? We've been above this area. This level really was so far away at times throughout this consolidation. But if you remember what we talked about, we started talking about it in October, because that's kind of when we were starting to see some caution flags. But it usually doesn't come straight down and crashes through that level. What you do, you get this, right? You top out, you chop, you make a new high, you come down. But this level, the threshold continues to creep higher while the market chops around, becomes choppy. So it gets closer and closer. And then if you do have that catalyst, bink, then it can breach. So this is very typical after a pretty healthy rally of where this CTA threshold comes into play again. Okay, but something to keep an eye on. Again, this is ballpark level. Every model is a little bit different. Goldman, Bova, McElliott, but all in the same vicinity, all in the same neighborhood. All right. What else did I want to show you guys here? This is seasonality. This time of Feb is usually the tough part of February. Something to keep in mind. All right, we're kind of right here now. All right, so this has been kind of the chop we've been dealing with in a sense. So seasonality goes against you a little bit. You know, kind of this stuff, and Yaya knows what I'm talking about. Most of you in the steam room would agree. This is what I would like to get flashing bullish. Like I would love to get this thing at least under 20, if God forbid under 10. You know, because usually getting back tested when the rebound comes, right? Doesn't mean the market has to bottom right there and then that day. Okay, we've seen it be early at times because it's a short, technically it's a short-term indicator. But when the rebound comes, it's not for a day or two. It's not for a week. It's usually multiple weeks. Multiple weeks. All right. So the last time we got that was kind of in November here. And that was like the last good one, huh? Entry-wise. That was this here. And look at the, like, it's a joke. That's not even a major pullback, but that's the last decent one where you kind of had a lot of the sentiment stuff aligned. But, you know, you had, you got this, right? So you got this to kind of play with. And that was the cyclical rotation. That was the cyclical led rally from there. So name-wise, you had ridiculous moves, right? If you bought any commodity name or metal name or, again, any cyclical name, you killed it in this time period. Like for me, that all was set up from this, right? Because, you know, what happens here, you get a rally and, you know, you get a pretty healthy rally, breath-wise, participation-wise, and you're going to be up over 60, 70 again. And you got to worry about that risk again, right? You got to worry about, you know, that's telling us to be careful chasing as far as putting new risk on at that point in time. All right. So that's why I would love, and that's what I want. Like I want the November low at the least here, right? I want this to get there. I want correlation to get there so you can feel a little comfortable buying something and you don't have to nail the exact entry and exit before you lose it. But we'll see. The market doesn't give a shit what I want, you know, especially this market, as crazy as it is under the hood, it's psychotic. You got a million different things going on out there, a million different things. And you talk about extremes, like Goldman thinks there's still some more to be had in some of these extremes, but who the hell knows? Think they know, they don't know. Here's the semis and software. You guys have seen this. You know, both sides of the spectrum. This is consumer staples that I was talking about as a defensive group. That's why they're squeezing. This here is this is healthcare and biotech. And I didn't post it. There was I think consumer discretionary was the other one. So anything consumer related has been seeing some selling. You know, anything consumer related has been seeing some selling. So, you know, who's buying? If you're wondering, CTAs are selling. I think Pro Bowl asked in the room, who's buying? If CTAs are selling, hedge funds aren't doing much buying. Institutions, they're selling. It's retail. Retail. So retail has been doing the big part of the buying. You know, what group as a whole. But you know, you look at it like what's being bought. It's It's a weird tape. It's a weird tape. Okay. Sharpies look fine. They look totally fine. They actually have covered short exposure in the NASDAQ. That's where they were most aggressively short, again, from September. But here are Sharpies. So nothing really doing there. Neutral. What else is there? Here are hedge funds and individual names hugging the. Remember they chased here? Whoop! They got flushed out. Didn't take long. So a couple of days of chasing and they spit up. There's nothing. There's nothing really else that's concerning in my opinion. Okay, I mean, again, the stuff that I was a little bit concerned about kind of have dissipated here. So that's why I think going into next week for names, like for the indexes, I kind of would wait for confirmation of, VVIX unwind and stuff like that, because you can time it a little bit better tactically, the indexes. But if, for names going into next week, I think anything that catches decent action and you like the name, I think it's worth taking a look. It's worth taking a look now that basically everything risk on has cooled off. The one group right now that's hot as a pistol's energy. So that's where kind of the heat is, from one extreme to another, right? Nobody wanted energy. Now everybody's in energy. But you got risk there too, right? This Iran thing kind of subsides and crude gets flushed. Probably leads to some selling in that space. Have you looked at ExxonMobil lately? Look at this. Look at this. All right. But the risk on parts of the market, and granted, a lot of the risk on parts of the market were severely crowded. I get it. But they've been washed out in a big way here. But now you got even the cyclical parts of the market that are risk on, they've cooled off. So that's why I think going into next week, anything that's kind of been in a little digestion or breather, name-wise, you see flow you're impressed by, I think is worth a look. It's worth a look. And that's it. And the risk, again, the risk is what I told you. The risk is you kind of get that selling we've been seeing, a little more overflows into the areas that have held up better. But honestly, a bomb can go off. Iran can nuke us tomorrow, right? But as of right now, the information in front of us, I don't think that type of sell is going to last long, because again, you got the panic indicator at 9, you got the equity put to call at an extreme, and one day of selling like that, you're going to have everything else. You're going to have everything else with it. So, and that's why names, especially, you can be a little early on names because, if they're, like, for example, okay, and again, it may not work out like this, but an example. If next week, some really good looking action comes into a tech name or a software name or, something, anything that's sold off recently, financial it could be, you get some selling, these things that are already sold off can hold up because they've sold off. It's likely going to be the stuff that hasn't sold yet that kind of takes the brunt of it before the turn. So that's why I think name wise, we are a lot cleaner setup going into next week. A lot cleaner setup going into next week. Okay, but and here's where the thing is, right? Like, I need to see, like, I want to see the sweeper activity there, right? That's ultimately the confirming indicator that players out there who have access to a lot more information, especially in this Trump White House, than I do, are putting money to work. You understand? If we're not seeing any call sweeper appetite and we're seeing put sweepers light up the board, yeah, I don't want to step into that. You understand? But anything that catches interesting call sweeper activity, I think is worth a look based off this, based off this stuff that kind of has cleansed nicely. Okay. What else? There was something else I was trying to think of here that I can't. Let me see here. Anything else? Oh, this is interesting. Look, this is kind of the overcrowded names. Remember we talked about this? NVIDIA, that forget the fundamentals, that just institutions own so much NVIDIA that they can't put any more exposure on. Remember we talked about that? So some of the stuff has come in here recently, but obviously NVIDIA, top of the list. Apple, Microsoft, Avgo, Google, Meta, Cisco. Well, that's coming here. But these are kind of the big names now. Back before this Mag 7 trade blew up, when the mega caps were hot, you had all these things maxed out. Yeah. Well, we were talking about that, T, because that's, again, that goes back. That's textbook playbook. Buy the bombs. But, it's funny because now everybody has that playbook. All right? Everybody has the buy the bombs playbook. So now it's like they buy it, they don't sell it, basically is what I'm saying. Okay? So it used to be that if Iran was really the problem here, okay, it would weigh on the indexes a lot more than it is, So you would get, kind of that downtrend, and then once bombs went off, you buy that selling, buy the bombs. But now, because everybody's got access to the same playbook, players don't even want to get shaken out. If it's going to be, if you end up buying the bombs, what are you even selling for? So that's kind of what it is now. But that's funny you mentioned that. If the missiles are flying, you buy them. It's the truth. This market doesn't sell off much for anything like that anymore. Anything. I don't know if it's a post 2009 thing since the Fed got involved, or even more so post-COVID with more retail involved. You used to get stuff that would spook this market on a shorter term basis that would create decent buying opportunities. You don't get that anymore. You don't get that. It's like they rotate into something else if they sell something. They rotate into something else. But that's basically the story. Anybody have any questions on anything here? On anything we talked about? We'll talk a little bit about names. Yeah, zero DTE, great point. That's another thing, right? Playing a big part. Think about the information you got out there now. Before, even before COVID, gamma, nobody knew what any of this stuff was. Then you got retail looking at the makeup of option positioning. Retail never had access to that shit before. That's where all this shit was a real edge. If you had, if you knew what you were looking at there. Now you got retail that know more about gamma than professionals. Huh? I see on Twitter that people writing book reports on this stuff. I don't know what the hell they're talking about. So that's what it is. It's just a lot more access to information out there too. Yeah, right? If you can't figure it out, you throw it into AI, like McElliott note. Even the notes, guys, right? Even the notes. Like McElliott, if you were in an institution, you weren't getting McElliott. Now McElliott's surfing, flying around all over the place. You know, you weren't getting that information retail. It's just a different game. That's why this market's so wild between machines and everybody has the same playbook and more exposure. It's crazy. Oh, forget it. We were talking about that. The single name futures. It's basically it's the racetrack casino it's turned into, which is fine. You know, if you're trading short term, you're gambling anyway, right? So, but yeah, it's nuts. It's nuts out there. Yeah, listen, it's been of recent, it's been more defensive. No doubt about it. It's been more defensive. Prior to the last couple weeks, I don't know, time flies. I can't keep track of weeks, but I would say the last 2-3 weeks, it was more of a rotation into cyclicals, right? So they were positioning away from tech and wanted stuff that would have exposure to the macro side of things. Okay, because again, the economic numbers were coming in better than expected, GDP higher than expected. Recently, here it's turned more safety defensive type thing. Now, yeah, that I think ultimately is kind of the bigger risk to the market. But again, I don't think it ends up in this huge drawdown. Like what I'm getting at is this, right? Like this is Bannister from Stifel talking about like financial conditions. You're at, and he's making the point here, financial conditions are pretty much as loose as they're going to be right now. Okay? That doesn't mean they have to tighten right now. You understand? And it doesn't mean they have to go from extremely loose to extremely tight. It's a process. But when you look at it through this point of view, right, you're on one side of the extreme and you're not getting any looser from here. So he's making the point that if a problem shows up, financial conditions are going to start to tighten, and that's going to be painful for equities. And that's where you probably see a quote unquote true correction. But right now, as of the close today, financial conditions, like you guys know, the Goldman one is even looser. But here are financial conditions as of today. And this is why money continues to rotate too, because without a problem, you put money to work in this type of backdrop. Look at this. Okay. So we come off kind of extremes here a little bit, but you're still green. Right. So the risk is kind of this, right? This is what led up and into the April liberation correction, whatever the hell it's called. Okay. So you had financial conditions start to tighten, and then it end up killing the equity market. But look what it got to by the lows. So it's more of a process to play out. But in my opinion, I think ultimately this is going to be part of the correction whenever it shows up. And here's the thing, though, right? We talked about this. You eventually, they'll be selling, but eventually you get the Fed back in your corner. So they're gonna look for stuff to buy. They're gonna look for stuff to buy. But you could get a 10% correction. You could definitely get that if that happens. I'm not a big macro guy, Luis. Luis is asking like kind of the macro stuff. I don't really look at macro too much. I try not to look at macro too much because the smartest people I know who look at that stuff, they can't even figure it out. So like, why am I going to pretend? The only time I'll look at macro is if it lines up with extremes on the positioning sentiment side of things. You understand? And that's where it'll be like an added concern or added bonus. Example, the whatchamacallit, October, last October last year, you kind of had again that melt up, that blow off rally in all the speculative names, and AI tech and all that stuff. And at the same time, you kind of had liquidity peak and roll over. You had a lot of the things supporting that kind of that liquidity pump starting to show signs of cracking. And at the same time, these things, were just in the midst of a blow off top, right? So it just adds even more concern, right? It gets you to, one, more importantly, not buy this stuff and get caught. But if you're looking for shorts, if you do that type of thing, that sort of thing. But yeah, I try not to, like, financial conditions are the extent of it. I look at like earnings revisions. Sometimes they line up well with sentiment, that sort of thing. But I don't try to break down macro. It's more sentiment stuff, even on the macro side I'm looking at. But for that reason, because the cycles and trying to predict, like everybody and their mother coming out of the 2022 bear market, including me, basically guaranteed a recession. There was no way to envision that we weren't going to run into some sort of slowdown when the Fed just got through the most aggressive tightening cycle ever. How could that not weigh on the economy? You know what I mean? And macro fund and every macro trader out there missed the whole low, bottom, and rally to follow because they were waiting on a recession. These things change over the course of time. They change so much. So you can understand now too, with the Fed involved and everything else. How do you predict this stuff? Now, what do they talk about now? A K-shaped economy. They pull things out of their ass. A K-shaped. In 3 months, they'll throw a different letter out there when it doesn't look like a K anymore. It turned into a Z-shaped recovery. They create shit as we go on. The only thing that listen, I'm in the game since 97. Okay? 1997. The only thing from that time to now that I've seen that provides a consistent edge, in trying to forecast things, is positioning and sentiment. It's honestly the only thing. Because if you think about it, it's the makeup of the market. It's the makeup of the market. Now, don't get me wrong. You could have positioning and sentiment red hot, and the market spits on it and continues higher. But from a risk management perspective, and that's basically what this game comes down to, I think it's the most important thing. Right? So for me, it doesn't matter if I milk the extra upside that's left in the rally. It doesn't matter if I'm not going to short and try to predict the top. What it does is it gets me to start raising cash and taking risk off the table when I should be, to avoid getting caught when that pull comes. So it's saved my ass. I mean, every time. I tell you guys the story all the time so you guys understand. That was the biggest hurdle for me. The biggest problem, it drove me nuts. I used to bang my head up against the wall. I can make money in any rally with the best of them. I had no problem making money. You know, it got to the point where I said, like, when a market bottoms and rallies, right? When it goes from everybody bearish extreme and starts to rally, you know, I'm no better than you are. You're no better than I am. We're all going to make money on the long side. A lot. Who does better? A lot of luck involved. So as long as you're not trying to short that rally, you're going to make money. The problem I had is I would make money in the rally and then whoop, give it all back. And then some. Every pull, like clockwork. Every pull. You know? So what ended up saving my ass was positioning and sentiment, allowing me to trim risk when I needed to trim risk to avoid giving back all my profits. You know? Because again, like this, as simple as this. Now, you know, simple. This was a nasty correction. But things like this, I'd get buried in. Things like this, I would give back all my money in. You know, especially now with options. You don't need this to give back your money in options. You get caught with a bag up here, you're dead. So that again, from you're talking about from 97 to now, there's been so much shit that I've seen people use, and there was an edge, and then it don't exist anymore. Like again, Elliott Waves was huge back in the day. Elliott Waves, yeah, guys like I don't know if you ever heard Bob Proctor, Robert Proctor was like the Elliott Wave god. You know, retail didn't have access to this stuff. It was the biggest thing in the world. Now, Elliott Waves, I don't know, does anybody use Elliott Waves anymore? Right? You had all these things, Elliott Waves, Fibonacci, Liberace levels, Ichimoku rainstorms, right? So many things come and go over the years. You know? So many things. But that's the game. The game changes. The game changes. You know, insider buying was huge back then. Then everybody, you know, started to get access to that information. That lost its luster. But the one thing that really really held its edge, and that's why again it's such a big part of my game, is you know, sentiment and position. That's why positioning of what's that for you? What the hell's that? Oh, I didn't see T. Have a good night, T. I didn't see you didn't leave already. CC down after hours missed. Let's see. That's the chemical name, right? I saw a couple of these chemical names down, I think today or yesterday. Down a couple bucks here. Yeah. This too, right? You know, the Niner. That's the other thing too, right? You had Niners. Look at all these Niners. Niners all over the place. So that was the other problem. You know, that was the other problem. What else had a Niner? Like some of the financials had Niners. Oh, that was a couple of weeks ago, right? Oh no, JP Morgan, yeah. You know, so you had a lot of these just upside exhaustion signals that have cooled off. Did the training, some of the trainings cool off? These choo-choo trains look bullish as all hell. Look at this. There's not much selling here. Look at this. Massive breakout here. These are the things. I'll be honest with you. This is kind of the stuff that still gives me trouble in this market, because this, like, I would never buy this. I would wait for a pullback, or a little bit of consolidation where sometimes it would flag. You know what I mean? Something like that. But as you guys see, there are names that just run through stop signs and keep going. But these look incredible. Look at this. All of them. They're not the sexiest names. Look, CSX is still pushing highs through all these exhaustion signals. Right? So you see the difference though when they break? Downside niner, upside niner. Down, upside niner, downside niner. Look, like clockwork. Bink, bink, and then whoop, the bust out, and now this niner, like, get the hell out of my way. Yeah, they look great, these things. But I mean, anybody buying these things now? This is kind of, it's a breakout, but it's stretched. You understand? It's kind of the problem. But they all look good. They look good. Another thing started to show up. We're starting to see insider selling start up in some of these cyclicals. Hasbro had some insider selling. These stocks are up big, though. They're up big. They're up big. The stuff, if we like the stuff that I've hated is kind of where I would love to see some quality flow in. Not the bigger names, even some of the underbelly names. Here's a name that sees flow every time it dips. But then again, usually it's an OPEX week, like this week, ONDS. Same thing here. Look, downside niner. Well, two downside niners here off the October tug, but here upside niner, downside niner, bounce. There's been flow, not recent, but CF, MOS, and NTR. Those are three ag names that have seen some flow. Like, look at these stocks are hot, man. Here's another cyclical that's been on fire. Dan, look at this. But listen, again, they're not easy. I'm telling you from experience, these names are not easy to play. Like, I'm looking for these names from October, and I can't even get my hands on. I can't pull the trigger because I'm not a big fan of this stuff. And I'm looking at these names. I'm looking for flow in these names. Because look at this move. It doesn't give you any opportunities. Once they go, they go. Deere had earnings, and this is why, like, if you like any of these and you see flow and they're at a decent spot, you buy them with time. You're early, right? Here's Deere. The circle is still here when we were talking about it, right? Here's October. Okay, the rotation into cyclicals, we start seeing them being bought up. Deere had not moving, dead money. Look at this eruption. Look at this. And here you had earnings, so gave it an extra boost. Well, yeah, man, huge breakout here too now. Huge breakout. So, this is where all the major breakouts are, and then some. You got breakouts that have been running. Now hopefully we start to see them pick some spots in some of the stuff that has sold. Some of the stuff that's sold off. Because here's the thing: if they don't start buying some of the stuff that's sold, okay, if they continue to sell, I think it's gonna weigh on this stuff. It's gonna spread to this stuff. You understand? So hopefully, if we start to see good looking flow show up in some of the stuff that's beaten up, some of the risk on stuff that they've been taken out to the woodshed, we can find some opportunity there. Tesla, like what's that been doing? I haven't even looked at Tesla. Let's see. Yeah, it's just been quiet. That's not even bad. Netflix, it's down every day. Oracle, this thing find a bottom yet? The software names, I have no words for. Like it doesn't even. I'm not even talking about software right now. I'm putting software on the side, and I'm talking about other parts of tech. Not again other parts of anything, but it doesn't have to be the most hated sector on in existence. But this now, if it can't bounce here, you got headaches. If it can't find a floor here, I don't know what the hell's going on anymore in these things. Yeah, here one thing that worries me. I posted it on Twitter. Did you see it on Twitter today? This is what worries me. You see this? What does that say? Retail? Look at that. That's what they're buying. That's what they're buying. Look at it. So retail is going to have to get it right for this thing to bounce. Maybe it finds a floor and doesn't go anywhere with retail in it yet. But you got financials. You got like look at this. Oh, this pain in the ass. All right, so here again, the Niners that we were seeing all over the place, and now look at this. So again, I got exposure to IWM, but I'm talking about in name wise. If this thing ends up busting out here, you get some action in names. And they got, I'm sure they heavily shorted too, so they'll squeeze the living piss out of them. The home builders look good, and they needed to breathe. They got hot. Pulte still not much selling here off the Niner. This is one of the better looking ones. Look at this. How good's that look? Woo! My goodness. My goodness. That's a good looking stock right there. Toll. All right. Again, they could breathe a little bit here. Some of them have started. We see flow here and there, nothing super aggressive yet. XHB, there's been some buying and a little put selling. In the XHB, the ETF, that had an upside niner here too, see? But they look good. They look good. Lenore, I think, is the laggard. Lenore. Yeah, Lenore's a big laggard. I don't know why, but it's a big laggard. DHI is kind of in between. See, all upside niners here. One that saw flow and underbelly, homie, Meritage, MTH. But they look good, especially the leaders. Like Pulte looks great. Toll looks great. DHI looks pretty good. Oh, KB Homes. It kind of looks like the DHI in between. And here's the thing: like when a group moves like this, the leaders take the baton and go. Eventually the laggards catch. They catch up. They make a move, but the leaders go bananas, right? So like, think of this: FedEx, right? Break. Look at this move. Look at this. Still not a seller to be found. Look at this. No sellers. And this thing caught nice flow too. And then UPS, which caught decent flow. Now this is the laggard, right? FedEx busting out new highs. UPS trying to get out of this downtrend. And UPS saw some decent flow. So my point is that, if you're looking at names, in the cyclicals, it pays to look at the leaders because they're the ones who bust out first. And then eventually it spills over. And, when kind of the bull trend is around a bit, then you get to spill over into the more speculative stuff. And we could have some fun. But, now it's the leaders. They're just gunning. How's this one doing? This had a pretty nice bounce. URI. Still didn't bust out yet. Probably will. But here, look, you had an earnings dip. Look where they bought it right up. Yeah. But yeah, I hate to say old news, but it is old news. The homies were the home builders were the lagging part of it. These cyclicals have been on a tear. Now, let's see, even for trades, I want to see if they come after some of this stuff that's, underbelly stuff that's been beaten over the head. Not even beaten over the head, that's sold off. Come in. Doesn't have to be in crash mode. The speculative stuff has been tough. It's not the right backdrop for it. Maybe we get a week or two where they're kind of in squeeze mode because they're probably heavily shorted. But some of this stuff with no fundamentals, you got to be careful. Like these guys. Look at it. There could be squeezes here. But it's almost like you're better off day trading these things, because these are all story. You don't have the liquidity backdrop for these names right now. There'll be exceptions, names that catch news or have better fundamentals, like this guy, right? So it's stronger than the rest, but you could see even this runs into selling. You got to trade it. You got to trade these really tactically. What else? What are you guys looking at? Any other AVAB? That had some flow today. They probably rolling, but that's a drone name. You know, even decent spot, even in a range here. Maybe some of these things they come after. I'm so lost though, like without flow, I can't just pick and choose these names, It's just so hit or miss. Like these drone names have looked okay, and then they sold off recently. This ONDS is really active. I remember RCAT I tried playing. It ended up ripping after I got out of it. The sad face over here. FJet, I never even heard of that. Maybe he doesn't trade options, that's why. FJet. Huh? What is it, IPO, huh? Space stock. These guys cooled off a little bit, right? RKLB. Yeah, not that. Look, downside niner and bounced. There's still demand for these suckers. There's still demand for these things. And believe it or not, NBIS, Patrick, they've been poking at. There's been a little bit of flow in this name, NBIS. There's been a little bit of flow. Today it was actually a decent looking sweep, but you got Feb OPEC. That's the problem. But they've been poking around in this NBIS. Yeah. August 145. They could be rolling out Febs there. But see, they even weeklies had some action. See, I'm posting lines on a bunch of times here. Here. But look. See, we got to keep, if you like these names, you got to keep your eyes open. $92. Where is it now? 108. And we can't chase these names like we did. Who knows? Maybe they end up ripping hard, but there's a lot more risk chasing these names than you're better off, believe it or not, chasing cyclicals. You're better off chasing cyclicals. So he was talking K-Toast, that's a stud, right? That's a stud. This thing's been on fire for so long now, too. Look at this. I should have tucked this name away, and I didn't. I think one of the leaders in the Russell too. There's BE, still holding up. But the problem is the upside. You understand? Holding up is one thing, right? You don't want something that may hold up, but there's no upside because the risk reward is a disaster. So we kind of want to keep our eyes peeled for stuff that's down in this neck of the woods. And that's, a lot of the cyclicals right now. Look, right? This is like where UNP and NSC are right now. And these are the better small caps. Like, again, here's the profitable small cap index. Where's the SPSM? No sellers. Look at that. Quality small caps. Regional banks have been doing good. They've cooled off here a little off the upside niner. Again, another niner. So many guys. So many there were. But like here's the thing for me, right? And I guess for anybody who's in the steam room, if you're not in the steam room, it can't apply. But like going into next week, I don't even. There's no watch list. I'm going into next week, and whatever catches aggressive activity, I like the name, I like the spot. I'm gonna fire. That's kind of my outlook right now. Where over the past few weeks, I really I didn't have any appetite to fire because again things were a little extended. Everything was extended. The only thing that wasn't extended was Tech Rec. And you're not going to buy earnings flow in Tech Rec. But now, really anything. Like anything, I say anything, and then I got to put disclaimers in because you got NVIDIA earnings, right? So really the semis don't apply. But I'm not looking at the semis anyway. Right? Because the semis, you got NVIDIA earnings. But anything besides the semis, software, hardware, underbelly, tech, again, even the speculative stuff, it's not an easy trade, but at the right spot, if they come after it and hit it, for a trade, why not? That's kind of like this, the ONDS, right? If it's at a half decent spot and you see some aggressive activity, you like it, it's worth a shot. Just, don't go crazy and don't marry it. Yeah, well, Tesla applies. I think if they come after Tesla here, that definitely is a candidate. You got a decent breather. All you need is aggressive activity there for even just a trade, right? So you got a good amount of stuff. Yeah. Again, it's the semis, and be careful with some of the cyclicals that have gone parabolic. But compared to there was another good looking name that caught a nice sweep today. You guys know this name? Again, I don't trust it because it's Feb OPEX, but AEHR. Is this a decent name? Oh, this is a spec name, huh? Yeah, I didn't even look at it because I said if they hit it next week, then I'll look at it. Let's see. Wait. Oh no, that wasn't the bet. I'm saying it was only 40 grand. Here it is. June 50s. 20 bucks out of the money. But it looks like a big mover, I guess. Well, so if they hit this name again next week, all right, underbelly names. Trying to think. Oh, Frog. They're losing money. Yeah, I just saw that AHR. Yeah, I mean, listen, there's if you're if you're looking underbelly and it's not cyclical, it's not going to be easy finding profitable names. Unless we see a new pocket break out. Yeah, hold for a trade. Exactly. Let me see. Did that bounce yet? Didn't bounce? No. I mean, there's got to be a bounce here somewhere. Again, if they come after it, right? If they come after it. If they don't, they don't. But if they come in like they usually come into Hood, lighting up $1 million sweeps post earnings, why not? No, I mean, this, right? Just that is a home run. Yeah, exactly. Let them come after it. We want to see somebody sticking out their neck, calling bottom for at least a trade. Maybe they come and sell puts. Listen, we all remember how they used to light a lot of these names up. Okay. Hood here, and again, it's a different time, but the amount of action and bombs that Hood caught even before the April correction from here, leaps and you name it, one day of action like that, it's worth a look. Yeah, I guess BTC would need to bounce. I mean, can that bounce? Oh, why BTC can't bounce? Again, I'm saying if they catch flow. If they don't catch flow, I have no clue. I'm being honest with you. I have no idea. If there's not aggressive sweeper activity, I don't know. I mean, again, I would think they're going to bounce somewhere. There's going to be an oversold bounce, but I want to see sweepers thinking the same thing. If they don't, then maybe there's a little more shaking out to do. Trading under the 20-day. Yeah, but I mean, if I didn't buy anything that traded under the 20-day, you would have missed this whole cyclical rally from October. You really wouldn't have traded anything. Like, I start adding moving averages into the mix and forget it. I got a shit show going on my end. You know what I mean? Especially like the 20. The 20, I mean, the most bullish stock in the world can dip under the 20. No? But I don't know. You might be talking for momentum purposes. I don't know, what type of trade you're talking about. But I don't really, again, the technicals, I don't really apply too many technicals. Kind of plain vanilla technicals. I like stuff. My favorite stuff is stuff coming out of consolidation. Whether it's above the 20, below the 20, it really doesn't matter. Because again, I'm not, you guys, some of you may be new. I'm not going home tonight and picking, handicapping and looking at charts and picking my names. You understand? The sweeper activity is my idea generator solely. If it's not getting swept, I'm not playing it. I'm not saying everybody's like that. I'm saying me. So that's kind of how I look at it. And the truth of the matter, like anything that's at a half decent spot that's catching aggressive buying, I want to play. Whether it's a short-term trade or I'm tucking it away. Sometimes that, like, I'll look into, are they profitable? These zero revenue names. Sometimes if it's late in the trend, I won't hold on to too long. But for me, simply Again, if I could draw up the perfect chart for me, is this dead heartbeat. That would be the ideal chart if I could have my way. Like if I was to scan for setups, I would scan for the dead heartbeat. And then if aggressive sweeper activity happened to show up right here on this day, that's where my edge is. That's where I went in. Plain and simple. You know, I don't want to I don't when there's call buying up here after there's been call buying the whole entire run. I don't want that. You understand? I want where nobody is in, and now sweepers are tipping me off to momentum coming in. Right? Sweepers show up there, I'm game. That's a good question. I used to use scans. Finviz, you could probably get it. I think it's free too. You know Finviz? Finviz. What are your thoughts on U.S. Trump attacks? I listen again. Knowing just Trump, I really don't see him doing something that's going to upset the market and really piss off his base. You know, does he fire missiles in there? Possibly, likely. You know, but I think it's more of like what Iran ends up doing. You know, that's kind of if anything, what people are concerned about, that's the fallout of it more than anything else. You know, and you heard him. He wants, by hook or by crook, he wants this Dow to go to 100,000 if he's got to rig the game. He wants a red MAGA hat with Dow 100K on it, like a little kid in a candy shop. You know how he is. You know? And honestly, I don't think it's that far fetched. You know, it's obviously a double, but I see a shot of that happening. You know, you get a new cyclical bull market, which we haven't had in ages. You get down 100,000. There'll be corrections along the way, I'm sure. Yeah, well, I mean, listen, they have no choice really. You know, they're gonna chill out a little bit as they're doing now, liquidity wise. You know, interest rates, they're gonna try to keep them as low as they possibly can. You know, and barring some exogenous event like a COVID or something like that, which certainly can happen. It's a crazy world. You know, that's one thing Trump is going to do is he's going to try to rev up the market and the economy. Whether he don't care if he leaves a time bomb when he leaves. You think he gives a rat's ass when in 5-6 years from now, if you got to pay the piper? He don't care. He's got Barrett. He's got Barrett on his Robinhood account clicking buttons. Oh, that's a good call, Patrick. What also has been on fire now? this part has also been unconscious and has come a long way. But these ADRs, I don't know if you guys have looked overseas. Look at any market. Look at this. By the way, we saw flow here too. EEM. Okay, while the U.S. market has been doing gathangul, these markets they're ripping. They're ripping. So a lot of these ADRs, even stocks like you would never buy, they were dead money. Here's an example that's been seeing flow. Nokia. Remember Nokia? Look at it. So stuff like this, even tech, even parts of tech, STM caught some real nice action. So these are ADRs, and there's been decent amount of flow. And the price action's been crazy. But all these markets, all of them have been hot. Brazil, even Europe. Look at this. Yes, Drunken Miller, Brazil. By the way, PAGS, somebody mentioned PAGS. That's why I bring up these ADRs. It's a Brazil name. I remember this name back in the day. It's a pain in the ass stock. Okay, it's not going to put them up and put them down like some of these names we looked at, the cyclicals. But these all have a bid. They're buying every dip in these names. I'm just making the point that even a name like a Nokia, which has been dead money for how long? Since the cell phone days? Let me look at a weekly. Probably got to look at a monthly. Forget the weekly. Look at this. My God. Look at this. Okay? Look at it. And it's starting to get some attention. Nokia. PBR, they bombed that stock. Okay? You want to see what they did, PBR? And if it wasn't energy, we'd probably be a lot more gassed up than we were. On December 13th, they came in and they inhaled Jan calls. Okay? I remember because there was a shakeout the next day. December 13th, right here. Look at this. The next day, little gap down, little, and that was all she wrote. And this is a slow mover. It's not a big mover. It's Petrobras. But this, ADR and energy, which has been red hot. Believe it or not, I played Oxy. When was that? December, January, maybe? And oh my goodness gracious. But yeah, ADRs. So if you see, especially those of you in the steam room, you see some flow in an ADR you like, you got the tailwind at your back. I think a few people in the room took a shot and nibbled at some Nokia. I think. NVIDIA took a stake in Nokia? Wow, I didn't even know that. Honestly, I forgot Nokia even existed until recently when it caught some sweeper activity, Sleeve. Super Gal. I didn't remember. I remember it back in the day, but I forgot it was even around. Yeah, the China names are tough. Okay, listen, They're the toughest of the bunch. Okay, but I get it. You want to take it? You like Baba here, or they come in and later, Raul, they come in and sweep Baba here. That's not a bad spot. But again, you know, China, you got some risk. You got some risk. Here's a name too that's been a real pain in the rear end. That's been that has seen some decent action. AI name, China, GDS. A lot of institutional money in this name too. GDS. But yeah, you know, China's tough, man. China's tough. You know, if anything, when you find one China name you like, you buy some calls with time. I honestly, I wouldn't go. I like EEM better, to tell you the truth. But that's a little too hot right now. Look at this. So EEM basically is if you want emerging markets outside of China. The clean China play is ASHR. And then FXI also has China exposure. And if you want China tech, that's KWeb. But you know, China's the worst of the markets. China's the worst of them. You know, but again, from this point, if you see any ADRs breaking out, catch and flow, they're interesting. Yeah, JD. You know, I've seen, listen, that's one thing about these China names. I've seen flow blow up in these China names. They're tough, man. You know how much smart money got lit on fire in China? You know, because again, you got a government there, you don't know what the hell they're going to do. And then you got beef, trade war, and this and that. Who knows what's going on? Which one? Oh, Tesla? Yeah, we were just talking about Tesla. Got a nice setup there. If we see some flow, we were talking about it earlier. You know, been nice and quiet. SMCI, let's see. SMCI. Yeah, I mean, again, spot wise, it's okay, you know, but you're dealing there's a lot of sellers in this name, you know? Like this move, a lot of trap bulls in this name. But again, spot wise here, you know, you could say to yourself, all right, I'm going to take a shot and, you know, I'm playing off the lows here. You know what I mean? It's not the worst thing in the world. Spot wise. You know, if it caught some flow, I'd like it even more. I mean, SMCI doesn't catch much of any clean flow these days. Ever since that blow off top. But again, spot wise, I don't mind it. Core, that caught action earlier this week. I think it's a beaten up software name. But again, you know, spot wise, you're down at laying on the concrete floor. I prefer it if they showed up again next week, you know, non-OPEX week. But again, if you like it already, you know, it's tough because it's been beat up. You know, you say like you don't want to like kind of SMCI, right? If it goes south, like you want to get out of it. You know, you're trying to take advantage of the spot. Here, like it's so beaten up that you may like it, and if you're early, you're okay with it because you got time. You know, but I don't really know much about the name. You know, what the biggest problem with this name is this. That's quite aggressive. like this. You know, you might deal with this. Now, there may be trades in there. You understand? If you time it right. But, you know, I think they bought with time, right? Jan calls. Yeah, I don't want to talk you out of it, you know? I don't want to talk you out of it. The only thing like I don't like about it is the aggressive sell-off. You know, and if that action showed up non-OPEX, I'd feel a little better about it. You know, here's the problem. Why it's not even that it's down that much. What happens is you get shorts, okay, and now after something like this happens, shorts are sitting on big profits, okay, but they may still they want to hold this short, but at this point they want to hedge against a squeeze. How are they going to do that? They buy calls. You understand? And it's very common in names that crash like this. So that's kind of the issue. If you're not sold on it already, I would hang out. Wait, you know, maybe they show up again in even a bigger way. You know, it found a low and they show up here again or something. If you don't like it already, that's what I would recommend. That's what I would recommend. But again, I don't know anything about the company or anything, you know. ABEV, I haven't that I've seen flow in that name in the past. I haven't seen anything recently, CL. This is an ADR, obviously, Latin America. My goodness. They've been hot, man. Yeah, they've been hot. And they may need to breathe some of these names. What we may see is money rotate into the US market again, right? It's been all overseas. It's been all overseas. All overseas. VXUS. I never heard. I don't think I heard of that trade of color. Let me see. VXUS. You said? Yeah, right. Oh, oh, wow. International ETF, huh? Oh, you got the right idea. Wow. Oh my God. That's a big move. Good for you if you're in that one. You got the right idea. The right idea. But that's it, guys. That's it. So again, especially if you're in the steam room, okay, going into next week, we got a lot cleaner setup than we had. So anything that has been digesting or has sold off and they come after it with a little appetite is worth a look if you like the name. Okay, if they don't come after anything, I mean, let's say Iran conflict or Nvidia shits the bed, who knows, right? If sweepers aren't showing much appetite, we sit tight and maybe we get that sweet spot set up of sentiment and positioning. But in names, if we start to see them come after names aggressively, I think it's worth taking a peek. I think it's worth taking a peek. All right, so I'm kind of looking forward to next week. One more day of this OPEX week. You know, it's been a shit show, but we didn't miss anything, and we'll see how they lay them out next week. All right, everybody, thanks for coming by. Enjoy the rest of your evening, and Steam Room members, I will see you mañana. Have a great night, everybody.